Rain, anong oras kayo dinismiss? Rain, 7. Anong oras kayo nag-start? Class, narinig ba ako? Inoxidan. Iya. Oo. Sa Banawi si... Rose ka Banawi? Rose Lucidan?
Pantay Bata po.
Pantay. Naririnig mo ba ako?
Yes po, sir.
Okay. Kasi every time na kayo ay magpe-face-to-face sa HBO, sabihin niyo sa akin agad, no? Kasi para ang meeting natin eh 8 to 9:30. Kasi meron kayong face-to-face class before or before the class. Okay. So let's start. Lahat. Saan sila?
Yes po.
Okay. Ready ka na mag-start.
Good evening, everyone. I'm Mary Rose Lack, and I'll discuss the continuation of UAS report. So, case number 3, acquisition at less than book value bargain purchase. A bargain purchase exists when the price paid is less than the fair value of the subsidiary's net identifiable assets. The excess is treated as gain on acquisition or gain on bargain purchase. Illustration. Assume that P Company paid only 80,000 for the 100% interest in the stockholders' equity of S Company. P Company would make the following entry to record the acquisition. Debit investment in S Company 80,000, credit cash 80,000. After posting the above entry recording the investment in S Company, the separate statement of financial position of P Company will show the following balances of the affected accounts. Cash 150,000, investment in S Company 80,000. Kaya po naging 150,000 yung cash is may minus po natin sa 230k yung 80k. Yung 230k po is nakuha po natin dun sa unang financial position po na si P Company is merong cash na 200k.
Okay.
So, pag po minus po natin yung 80k, ay makakuha po tayo na 150k. Kaya po naging 150k po yung cash po dito. Before the preparation of working paper elimination entry, the difference or excess between the consideration given and the book value of interest acquired is computed as follows. Consideration given price 80,000 less book value of interest acquired 100%, common stock of S Company 50,000, additional paid in capital S Company 30,000, retained earnings S Company 20,000 with a total of 100,000. Gain on acquisition bargain purchase is negative 20,000. Working paper elimination entry. After computing the income from acquisition, working paper elimination entry can now be prepared as follows. Common stock as company debit common stock as company 50,000, debit additional paid in capital as company 30,000, debit retained earnings as company 20,000, credit investment in S Company 80,000, credit retained earnings P Company gain 20,000. So ito pong eliminations na po ito pong entry na to, i-record po natin siya dito sa elimination column sa consolidated working paper. Take note that since only a statement of financial position is being prepared, the gain on acquisition is closed directly to the parent's retained earnings. Consolidation working paper. The working paper showing the elimination entries and the consolidated amounts to be presented in the consolidated statement of financial position is shown below. P company and subsidiary consolidate P company and subsidiary consolidated working paper December 1, 2017. Assets. Cash of P company is 150,000 and the consolidated amount is 150,000. Accounts receivable of P company is 40,000 while the S company is 30,000 with a consolidated amount of 72,000. Inventory of P company is 50,000 while the S company is 20,000 with a total of 70,000. Equipment of P company is 180,000 while the S company is 158,000 with a consolidated amount of 338,000. Investment in S company, P company 80,000. Total assets of P company is 500,000 and the S company is 210,000 with a consolidated amount of 630,000. Liabilities and equity. Accounts payable of P company is 280,000 and the S company is 110,000 with a consolidated amount of 390,000. Common stock. P company 100,000 with a consolidated amount of 100,000. S company 50,000. Additional paid in capital. P company 80,000 with a consolidated amount of 80,000. S company 30,000 with a 30,000. Retained earnings. P company 40,000 with a consolidated amount of 60,000. S company 20,000. The total liabilities and equity of P company is 500,000 while the S company is 210,000 with a consolidated amount of 630,000. Take note that the income from acquisition is not presented in the above working paper because it is close directly to the retained earnings of P company 40,000 plus 20,000. Consolidated statement of financial position. From the consolidated column, a formal consolidated statement of financial position can now be prepared. Acquisition is partially owned subsidiary less than 100% interest. The consolidation of a parent company and its partially owned subsidiary differs from the consolidation of a wholly owned subsidiary in one major respect. The recognition of non-controlling interests, formerly called minority interest, the non-controlling interest, or NCI, is defined as the equity in a subsidiary not attributable directly or indirectly to a parent. The non-controlling interest in the net income of the subsidiary is presented in the consolidated statement of comprehensive income to be discussed in Chapter 15, and the non-controlling interest in the subsidiary's net assets is shown in the consolidated statement of financial position in total, and it's not broken down into common stock, additional paid in capital, and retained earnings. The NCI must be shown as a component of stockholders' equity. Sabi po dito, yung non-controlling interest po ay dating tinatawag na minority interest. Ang non-controlling interest po is consider po siya as the equity in the subsidiary at hindi po siya connected to the parent company. So, ang net income po ng NCI is makikita po sa Consolidated Statement of Comprehensive Income and yung net assets naman po niya is makikita naman sa Statement of Financial Position and ito po ay tinitreat as the component of stockholders' equity. Measurement of non-controlling interest. As discussed in Chapter 13, IFRS 3 provides two options of measuring non-controlling interest in an acquiree. First option, at fair value, or second, at the non-controlling interest proportionate share of the acquiree's and identifiable net assets. Under option 1, any goodwill that arises at the time of acquisition is allocated between the parent and the non-controlling interest or NCI. Under option 2, any goodwill that arises at the time of acquisition is assigned only to the parent. There is no requirement in IFRS 3 to measure non-controlling interest on a consistent basis for similar types of business combinations, and therefore, an entity has a free choice between the two options for each transaction undertaken. The option to value NCI at fair value will be used throughout unless stated. For the purpose of measuring non-controlling interest at fair value, it may be possible to determine the acquisition date fair value on the basis of active market prices of the equity shares not held by the acquirer. When a market price is not available, the acquirer should measure the fair value of the non-controlling interest using the other valuation techniques, IFRS 3. So yung pagme-measure daw po ng NCI is may two options. Yung una, at fair value, at yung isa na non-controlling interest proportionate. Ganun. So under po ng option 1, yung the goodwill daw po is madidistribute siya sa between the parent company and NCI. While on option 2, the entire goodwill po the entire goodwill only belongs to the parent company. Wala naman daw pong requirement according to IFRS 3. So, mame-measure po natin ang NCI. Mame-measure po natin ang NCI through active market prices po. At pag hindi po available yung market prices, pwede po tayong gumamit ng other valuation techniques. According po sa IFRS 13, ang other valuation techniques daw po ay yung market approach, cost approach, at income approach. Sabi nga po dito is no requirement in IFRS 3 to measure controlling interest. So, yung lahat po ng entity is merong pong freedom to choose between the two options. Pero despite that, the authors po is decided to use the NCI at fair value. Pero if may na-mention na po sa problem na gagamiting measurement, is yun po yung gagamitin natin. For a detailed illustration of the consolidation procedures for a partially owned subsidiary, the Statement of Financial Position of P Company, Illustration 14-7, and the Statement of Financial Position amounts and the fair values of the assets and liabilities of S Company. On the next page, Illustration 14-8, before acquisition will be used. Illustration 14-7. P Company, Statement of Financial Position, December 1, 2017. Assets, current assets. Cash, 218,000. Accounts receivable, 144,000. Inventory, 160,000. With a total of 522,000. Non-current assets. Land, 200,000. Building net, 840,000. Equipment net, 400,000. With a total of 1,440,000. The total assets is 1,962,000. Para po makuha yung total assets, ipagpa-plus po natin yung total current assets at total non-current assets. Liabilities, accounts payable, 160,000. Bonds payable, 400,000. Total liabilities, 560,000. Stockholders' equity, common stock, 10 pesos par value, 400,000. APIC, 500,000. Retained earnings, 502,000, with a total equity of 1,402,000. The total liabilities and equity is 1,962,000. Illustration 14-8. S Company, Statement of Financial Position, December 1, 2017. Assets, accounts receivable, the book value and fair value is 40,000. Inventory, book value 100,000, fair value 110,000. Land, book value 80,000, fair value 130,000. Building, net 300,000 of book value, fair value 500,000. Equipment, net book value 80,000, fair value 120,000, with a total assets of 600,000 in book value and 900,000 in fair value. Liabilities and equity. Accounts payable, book value 80,000 and the fair value is also 80,000. Bonds payable, book value and fair value is 200,000. The total liabilities of book value and the fair value is 280,000. Stockholders' equity. Common stock, piece of par, 20,000. Additional paid-in capital, 180,000. Retained earnings, 120,000. The total equity is 320,000. Net assets of peak of book value is 320,000 and the fair value is 620,000. That's all. Thank you po.
Okay, wag mo nang ano ha, wag mo nang i-stop sharing. Dalhin mo ako doon sa area na meron kang two options to measure non-controlling interest.
Tapos.
Okay, so number one is at fair value. Number two is non-controlling interest proportionate share of the acquirer's identifiable net assets. Pwede pa naman palinawin yan ng author no? Kasi yung number 2, base rin naman yun sa fair market fair market value. Yun natang number 1, mas malinaw kung sinabi ng author, the fair value of the ordinary shares of the acquiree. Mas malinaw yun, no? Kasi ang pinag-uusapan natin dito ay acquisition through purchase of stock, ano? Ano pinag-uusapan natin dito? And then, okay. So, malagang tandaan ninyo yan, ano? Kapag number 1 yung ginagamit nyo, pati yung NCI, nagkakaroon ng allocation ng goodwill. No? Now, kung gusto mo naman walang allocation ng goodwill ng NCI, gamitin mo yung number 2. Number 2, no? Now, in practice, nasa discretion yan ng acquirer at acquiring kung anong gagamitin, ano? Silang bahalang mag-agree. Pero, in the absence of any indication or the problem is silent, siyempre ang ating magagamitin what is the latest or yung revised IFRS, ano? So, number 1 ang gagamitin mo. Number 1. Okay, so number 1 ang gagamitin. And then, plus, ano ba tawag dito? Sa date of acquisition, ano? Date of acquisition consolidation. So, sa date of acquisition, you have to come up with the consolidated statement of financial position. Now, para mas lesser ang trabaho, gawin mo yung date of acquisition at the end of the period, at the end of the month. Kasi yun ang saraduhan ng ng mga libro, no? So, para menos trabaho, tapat mo yung date of acquisition sa end of month. Ano ba ang nangyayari sa date of acquisition? Siyempre, ipa-finalize mo na yung iyong mga financial statements for that period, ano? Kunyari, ang date of acquisition natin end of month, ipa-finalize mo na lahat ng financial statement mo as of that end of month. This is also the chosen date of acquisition para lesser ang trabaho. No? So, yung subsidiary, at that date of acquisition, at that date of acquisition, eh, syempre meron siyang ano, tawag dito, statement of ano, comprehensive income, tapos yun, ipapasok ng subsidiary sa kanyang statement of financial position ng subsidiary, ano? O teka, the subsidiary, uh, for that end of month, the subsidiary has, or rather the acquiree, has to come up with the statement of comprehensive income. Okay? Tapos alam naman natin, whatever yung ano, bottom figures ng statement of comprehensive income, mag-a-appear yan sa ano, sa acquiree sa statement of financial position, ano? Ganon. Sa acquirer side, ganun din, ganun din, ganun din. So, ano makikita sa statement of financial position? Abay, retained earnings, no? So na ikinilose yung ano, yung whether income or loss. Isang item yon na covered ng retained earnings sa statement of financial position. Kung nag-profit ang acquiree, eh ipo-forward yun sa ano, sa retained earnings. Kung loss, eh kabawasan yun sa retained earnings, statement of financial position ng acquiree. Ayun, nabanggit ko yung ano, dapat both sides, meron silang ano, final statement of financial position. So again, reflected na doon sa acquiree side, yung kanyang statement of comprehensive income, kanyang statement of financial position. No? Included na yun sa kanyang retained earnings. Oo. Tapos designated under the pwede niyang lagyan ng ano, net income for the period. Pero under pa rin siya ng ano, retained earnings. And then, yung statement of financial position, tsaka yung ng both sides, ano? Ayun ang ano, yun ang ikino-consolidate, no? So, ang consolidation ay statement of financial position ng acquirer at statement of financial position ng acquiree. No? Now, we are talking of consolidation at date of acquisition. Iba pala yung consolidation after the date of acquisition. Kasi mag-open, buhay pa yung parent at subsidiary, di ba? Pag re-report pa sila periodically. Okay. So again, pinag-usapan natin dito, date of acquisition. So ang kailangan lang dito ay yung statement of financial position ng both sides. Yun ang i-consolidate. No? Okay. Ay paano yung statement of comprehensive income? I-pinorward na nga yun. Pinorward na yun sa retained earnings. Yung dalawang statement of financial position. Eh, di nang itago yun. No? So, consolidation between, consolidation of statement of financial position. Yun. Dapat maging malinaw tayo at this point, no? Kaya may nababanggit din yung isinasarado raw sa retained earnings. Oo. Eh kasi nga, isinarado mo na yung expense at income sa retained earnings. Kaya ang gagalaw ngayon yan, retained earnings. Nababanggit niyan, no? It is being close to retained earnings. Kasi ang hawak mo na kasi statement of financial position na eh. No? Okay. So, now we go to the next reviewer to, no? makita kung anong laman ng reviewer. Si De Los Santos. Okay, it's a good report, ano? It's a good report. De Los Santos, nandiyan ka ba? Let us say the reviewer.
Kita na po ba?
Oh, konti pa kalaki. Maganda, maganda.
Wait lang po.
Ito na yan. Yan. Ganda.
Okay po.
Mm-mm.
Problems. Number 1. On May 1, 2016, Petty Corporation acquires 80% of the outstanding common stock of Sure Company for 2,800,000 pesos. Professional fees paid to effect the combination amount to 70,000 pesos. On the date of acquisition, the stockholders' equity of Sure Company is as follows. Capital stocks, 3 million pesos. Retained earnings, 437,500. On May 1, the book value of the net assets of Sure is equal to their fair value. Non-controlling interest is measured at implied fair value. In the preparation of consolidated statement of financial position on May 1, 2016, what is the working paper elimination entry? Yung working paper elimination entry, yun nga yung parang kino-consider natin na as one na yung dalawang entity. Choices. Letter A, capital stock of Sure with the amount of 3 million pesos is debit. Retained earnings of Sure, 437,500 debit. Goodwill, 62,500. Credit investment in Sure, 2,800,000 pesos. Non-controlling interest of 700,000 pesos. Letter B, capital stock Sure, 2,400,000 pesos. Retained earnings Sure, 350,000 pesos. Goodwill, 120,000 pesos. Credit investment in Sure, 2,870,000 pesos. Letter C, capital stock of Sure, 2,400,000 pesos. Retained earnings of Sure, 350,000 pesos. Investment in Sure, 2,750,000. Letter D, capital stock Sure, 3 million debit. Retained earnings of Sure, 137,500 debit. Investment in Sure, 2,750,000 pesos. Non-controlling interest of 687,500. The answer is A. Ito po yung solution and explanation para dun sa answer. Implied fair value of non-controlling interest is equals to 2,800,000 pesos divided by 80%, which is yung rate na ina-acquire ni Petty Corporation, times 20%, which is the non-controlling interest, is equals to 700,000 pesos. Price paid of parent is 2,800,000 pesos with a total of 3,500,000. Less the book of identifiable net asset of Sure, 3,437,500. Paano natin nakukuha tong 3,437,500 is pinag-plus natin yung capital stock na 3 million at yung retained earnings na 437,500 pesos. Without total goodwill is 62,500, which is yung pinag-minus yung 3,500,000 sa 3,437,500. Explanation. In the preparation of consolidated statement of financial position on the date of acquisition, Equity accounts of subsidiary are eliminated against the investment account, which is the parent interest and non-controlling interest. The excess is allocated to goodwill. Therefore, elimination entry A is correct. Problem number 2. May 1, 2016, the separate statement of financial position of Pablo Corporation and Simon Company are as follows. Cash for the entry of Pablo, 145,700. Accounts receivable, Pablo, 120,500. Inventories, 42,500. Plant assets, 185,800 with a total assets of 494,500. Liabilities of Pablo, 110,400. Capital stock with a par value of 100 pesos is equals to 200,000 pesos. Additional paid in capital, 50,000 pesos. Retained earnings of Pablo is 134,100 with a total liabilities and stockholders' equity of 494,500. Lang. For this for the entry of Simon, cash 15,500, accounts receivable 35,800, inventories 10,200, plant assets 78,000 with a total of total assets 139,500. Liabilities of Simon 28,800, capital stock with a par value of 100 pesos, 50,000 pesos. Retained earnings of 60,700 with a total liabilities and shareholders' equity of Simon of 139,500. On May 1, 2016, Pablo acquires 100% of Simon's outstanding capital stock for 150 pesos. Pablo incurred additional 32,700 in acquisition related costs. All the assets of Simon are fairly valid except the plant asset with a fair value of 90,000 pesos on May 1, 2016. In the consolidated statement of financial position on May 1, 2016, what amount of total asset will be reported? A. 646,000 pesos. Letter B. 490,600 pesos. Letter C, 523,300 pesos. Or letter D, 634,000 pesos. The answer is letter B. Solution and explanation. Consideration given or price paid 150,000 pesos less book value of identifiable net assets of Simon, which is 139,500 minus 28,800. Yung 139,500, yun yung total liabilities and owner's equity. Less natin yung liabilities kasi nga ang kinukuha lang natin ay yung net asset ni Simon. Kaya ang total niya ay 110,700. With excess of 39,300. Allocated to plants, fair value of 90,000 pesos less 78,000 pesos is equals to negative 12,000 pesos with a goodwill of 27,300. To continue, total asset of book value before acquisition is of Pablo is 494,500. Price paid at acquisition of negative 150,000 pesos. Acquisition related cost of 32,700 pesos. Kaya siya negative, ileles kasi siya dun sa book value na inacquired ni Pablo is the total assets after acquisition of Pablo is 311,000 pesos. 311,800 pesos. Total asset of fair value of Simon is cash 15,500, accounts receivable 35,800, inventory 10,200, plant assets of 90,000 pesos which is yung par value, par value nga niya is equals to 151,500 plus yung goodwill na 27,300 is equals to consolidated assets of 490,000 pesos, 490,600. Using the same data in number 2, what amount of stockholders' equity will be reported in the consolidated statement of financial position in May 1, 2016? Letter A, 384,100. Letter B, 494,800. Letter C, 351,400. Letter D, 472,600. The answer is C. Ito yung solution kung paano siya nakuha. Stock capital of Pablo is 200,000 pesos. APIC of Pablo is 50,000 pesos. Retained earnings 134,100 pesos minus 32,700. Itong 32,700 pesos, yun yung additional acquisition related costs na kino-consider as expense in which the costs are incurred at the time of the service are received. With a total of 101,400. Stockholders' equity on May 1, 2016 will be 351,400. Number 4, the statement of financial position of CISA Company on December 31, 2016 is as follows. Asset, cash, 100,000 pesos. Accounts receivable, 200,000 pesos. Inventories, 500,000. Property and equipment, 900,000 with a total assets of 1,700,000 pesos. Liabilities and stockholders' equity. Current liabilities, 300,000 pesos. Long-term liability, 500,000. Capital stock with a par value of 1 peso is equals to 100,000. Retained earnings, 800,000. Total liabilities and equity is 1,700,000. On December 31, 2016, Luto Corporation purchased all the outstanding stock of CISA Company for 1,500,000 cash. On the date, the fair market value of CISA's inventories and property and equipment are 450,000 and 1 million respectively. The fair values at all other assets and liabilities were equal to their book values. As a result of acquisition at CISA's capital stock, Pluto should record a goodwill. A, 500,000 pesos. B, 550,000 pesos. C, 600,000 pesos or D, 0. Ang answer dito ay D. Solution explanation. On the date of acquisition, no goodwill is recorded in the book value of the acquirer. Kasi nga, di ba yung goodwill, i-record natin siya sa acquiree. Using the same data in number 4, the consolidated statement of financial position on December 31, 2016 of Pluto and CISA should report a goodwill in the amount of A, 500,000 pesos, B. 550,000 pesos, C. 600,000 pesos, or D. 650,000 pesos. Solution and explanation. Price paid of 1,500,000 pesos less book value of identifiable net assets of CISA is 900,000 pesos. Excess is equals to 600,000 pesos. Kasi pinag-minus natin yun nga, less book value natin sa price paid. Allocation or adjustment of assets. Inventories, 50,000 kasi yung book value ng inventories, di ba, ay 500. Ang sabi dito, ang magiging fair value na lang niya ay 450. Kaya yung inventories niya ay 50,000 pesos. Well, yung property and equipment, yung book value ng 900,000 pesos less yung fair value na 1 million kaya negative 100,000 pesos is equals to negative 50,000 pesos. And consider na yung goodwill niya will be 550,000 pesos kasi excess minus itong allocation and adjustment sa assets. Yan lang po, sir.
Wait. Ket, ibalik mo nga ako doon sa iyong solution, number 4. Number 4.
Ito.
On the date of acquisition, no goodwill is recorded in the books of the acquirer. Kasi, ganito yon. At the date of acquisition, syempre, may libro ang acquirer. At meron ding libro ang acquiree. Now, dapat meron ding libro, separate, yung consolidated entity, no? Consolidated entity. Dapat meron din kanyang libro yun, no? Okay. So, after consolidation, lumalabas na may goodwill. So, yung goodwill na na-complete mo, hindi mo i-record sa book ng acquirer. Hindi mo rin i-record sa book ng acquiree. Doon mo siya i-record doon sa libro ng consolidated entity. Doon mo siya i-record. Consolidated entity. So, dito, magiging tatlo ang entity, no? The acquirer entity, the subsidiary entity, at saka yung consolidated entity, no? Ano mangyayari doon? So, goodwill will be in the records of the consolidated entity. Wala sa libro ng acquirer, wala sa libro ng acquiree. Okay. So, okay. So, good report. Any question, class? You may stop the sharing. Okay, class. Buksan lang inyong mga camera. Rose Ann. Si Rose Ann. No, si Dan. You are our photographer this evening. Marami ata kayo riyan. Ano ba yun? Tenorio. Oo. Okay. Rose.
Game na po.
I just say, everybody smile. Patricia. This is Patricia. Just share. Okay, just say 1, 2, 3. And we will smile. Smile, smile,
1,
smile.
2, 3. My God!
Smile lang naman. Ah. Na-chat mo na. Wala pa dito. Tingin ko ha.
Sinasend pa lang daw po, sir.
Oo. Okay, class. Till we meet again next week. Bye-bye. Happy weekend.
Thank you po. Thank you po.